Hey, welcome to the Closing Beat, everybody. Happy August. Hope you're having a great day here today. This is a quick show that we do. We call it the Closing Beat, just to update you on the stock market, the good, the bad, and the ugly for the day. We started off by doing this for our customers, and then we thought, hey, let's just share with everybody if anybody's interested. But for our customers, actually tonight, we're financial advisors, by the way, so we help with investments and your personal finances and everything. Tonight, we have our class, our portfolio update, and we're going to work on some geeky stuff in there too. We just finished a study that you won't believe. I mean, if I told you, you'd just be like, nah, that can't possibly be true. So we're going to show you all the data and everything. We're also going to include some lessons in there as well. We try to keep the class fairly short, but we'll go over any portfolio updates that we did. We did have some, any adjustments to our portfolios, which you can find on our website. If you're not one of our customers, you can actually go right on our website and see. They're just like mutual funds. We treat them like they're mutual funds. We manage them the same way, only they have no expense ratios. We do not charge for them. We just don't offer them to the general public. So we'll go over that. That's tonight at 8 o'clock. You should have the email already if you're one of our customers. I'm sorry if you got duplicates or even a triplicate email. We're trying to get fancy here with some of the coding in the back end, and a couple emails went out a little bit more than should. There was about a dozen of you that got more emails than you probably should to the class. So sorry about that. It's what it is. Hey, let's talk about the stock market. Actually, before we start, if you want to play Guess the Dow, we have a game. If you're joining us for the first time, you go there, you guess the Dow. No strings attached. There's no marketing or anything like that. Just tell me where you think the Dow is going to close this time at the end of next week. And if you're closest without going over, we'll send you $100 in a gift card or credit your account if you're one of our customers. You got the Dow lower by 280 today. I should be saying the Dow higher by 280. But instead, you're lower by 280. The S&P lost 26 and NASDAQ lost 64 on the day, all basically after lunch when Mr. Trump woke up and decided we're going to go after China a little bit more. Now, let me back up for a second. Remember yesterday we were saying, hey, the trade war negotiations where we sent people over there, they were negotiating yesterday and Monday as well. Nothing happened. They left. The negotiations ended. But we were all focused on the Fed. So we were talking about how we're all looking over here, but really over here, what's going on? And I think if there was no Fed announcement yesterday, we would have been focused on that all day. The markets would have been lower anyways, because nothing got done. Nobody was asking, hey, is there a deal? Are we close to a deal? Are we not going to have a deal? What's going on? They just sort of left and came back home. Well, I have some thoughts on this, and this is Washington. If you're older than me, then you know this is how Washington works. But here's the bottom line. There can't be a deal, right? There can't be a deal until closer to the election. Now, the media is running with the idea that China is waiting Trump out to see if he gets reelected. In fact, it's the exact opposite in my humble opinion. I think that there is a deal already that Trump is willing to accept, but he can't have a deal too far away from the election. He needs the deal to happen at that point. So he very well could have had these negotiators come back and go, here's where we're at. He might have looked at that and said, I could agree to that. I could sell that to the American public, but let's not agree to anything. Let's push them harder because I need more time. I can't have a deal right now. And the media is not even focused on that. They're thinking, oh my gosh, China's playing around with Trump. I think it's the opposite way. If you know how Trump works, if you ever read about him in his business world, he knows how to do that sort of thing. He's always 2 steps ahead. Even if the second step is not the best step, he's always 2 steps ahead. So I think that's what's going on here. Now, in the meantime, you have the markets going, oh, crap, you're going to tariff them more, right? You're going to put 10% tariffs. That was the announcement today. The remaining $300 billion are going to be taxed at, we're going to put 10% tariffs on starting September 1st. Now, in my opinion, that's just a way to kind of push China more. They don't know that he's willing to agree to this deal, so he's going to try to get a little bit more out of them because he needs more time anyway. So it doesn't matter if it takes longer. And because of that, you have the markets a little bit lower. Now, when you look at the markets in general, can he afford for the markets to be lower? Absolutely. We got a 20+% gain. He can afford the markets to fall for a while. You may not like it. I may not like it, but he has breathing room as far as the stock market is concerned. And so when you line up all those pieces, I think that's what we're ultimately going to maybe find out one day, or we'll see how it plays out. But the bottom line is, if he holds out and pushes them even harder, he can eventually accept the deal terms that sort of they come up with, which means they can go sell it to the Chinese public as we won, we got the best deal. Trump can say, I'm good, this is a good deal. You guys like this? We have a deal. And so both sides get to win. And when we started this whole thing early last year, remember that we said that in order for there to be a trade deal, whether we were talking about Canada, Mexico, and whoever, it has to be where both sides can go back and say, yes, we got the best of the end of the deal, right? We're not there yet, and if we are there, he's not saying anything about it. Anyways, so the stock market a little bit lower today. The S&P 500 headed back down to the 50-day moving average and possibly moving a little bit lower. We'll see how the rest of next week plays out. So all of this action came in the later part of the day. To start this morning, we had nearly erased all of yesterday's declines. So the public was just ready to move on without the Fed and say, all right, we get it, to cut rates and everything, let's move on. It was confusing. Yesterday was a bit of a mess with the Fed cutting by a quarter point, but everybody was basically ready to kind of buy that dip until the tariff news. And then he piled on a little bit more and said, hey, you know what? The 10% could even go over 25% at some point. I'm not even sold on the 10%. So just adding more pressure on the other side to say, look, let's work this thing out in more of a unconventional kind of way, which, you know, that's this presidency. It's just unconventional, whether you like it or not. That's how we're proceeding. And so that was kind of my thoughts on that one. Even though the S&P 500 was lower on the day, you had a quarter of all of the S&P was still higher. I mean, it was a decent day. So overall, not too bad. In the meantime, we're all talking about the stock market. The most important thing, none of this matters, by the way. Everything that we talk about every day just doesn't matter. The only thing that matters today is in Orlando, they announced a new Universal theme park. That's all I could think about all day. That's all I was looking at. I was like, oh my God, we're getting a whole new theme park. I remember when they bought the land and there was some speculation. Today it's official. They're building a new theme park. I can't wait. I hope they build it fast over there. Okay, all joking aside, let's move on to some of the stocks in the news after hours here so you can get that going. You got Pinterest. They reported earnings here much higher after hours, beat on earnings, beat on revenue, and their monthly active users was higher by 30%. That was much better than expected there. They only lost 26 million versus the 39 million everybody was expecting them to lose. And so very positive for Pinterest. If you, I don't know, it's not like the most popular stock out there. Recent IPO. So if you like that sort of thing, then, or you bought into that, then you're very, very happy. I believe it was up almost 20% after hours. Am I wrong? We're up about 12% after hours here, settling around the $32 mark. So that's going to be way up here going into tomorrow. Very positive move here for Pinterest if you happen to be playing along. Also, Square reporting earnings, and they got a lot going on here. There's a lot in this earnings announcement, so I won't pretend like I've covered all of this here for you. You got Square after hours trading. It's about 7% lower, around $75. That's going to put it down here, almost back to the 50-day moving average. It's wiggled around a little bit. It did come down that far after hours, but right now looking like around the $75 area where it's going to open. Square beat on earnings, beat on revenue. Guidance was light, right? Their projections going forward. So what they told Wall Street they were thinking was going to happen is not going to happen. That's what basically they said. And I believe they sold one of their businesses to DoorDash. I just caught the tail end of that. Someone in the comments there maybe can help us out there. So those are the bulk of the sort of news after hours. You got NTAP in the news also, not one I usually cover, but they reported earnings as well. And I think Etsy, I want to say Etsy was today. I believe it was Etsy. They didn't do well if it was today. Got my days blending together. Yeah, down about 3%. That's earnings related there. $66. I didn't even type it right. I'm sorry. So that's that one. After hours, almost 3% down to the upside. Was down closer to $60. So, wow. That was definitely earnings there. All right, so in the Dow here today, you've got, really the tariffs are going to be the focus. So when we look at the Dow, you see the pullback towards the 50-day moving average. What's going on inside of there? Anything that gets hurt by this latest round of tariffs is what really took the brunt of the drop in the Dow. So you got Nike down about 3.5%. You can, of course, understand how they're tied into China. Caterpillar, always going to be a focus on this one with tariffs. Closed near lows, down about 4%. That's going to be your weaker area there in the Dow. Apple, now keep in mind that this latest round of tariffs, if they do go through, this will affect Apple, right? So this one's going to have a bit of a weigh on them just a little bit. And it's not coming up for some reason. Did I type it right? Yeah, I typed it right. So anyways, Apple, 20% of their revenues come from China. And so that's a big deal, right? Because this latest round of tariffs, they're going to have to deal with that. They also have their suppliers over there as well. So Apple started off like everything was going to be okay and then sort of fell apart there as the day progressed. If we go over to the S&P 500, it's retail focused. So if we look at like the XRT, that horrible day today. In fact, not one retailer like a Ralph Lauren or PVH, Urban Outfitters, things like that. Not one of them was positive today. They were all negative on the day, all because of that focus. I'll also point out like Best Buy, pretty weak day for Best Buy, losing over 10% on a tariff news. Again, a lot of that coming towards the second half of the day if you're playing along. You got Kohl's in there, sticks out as one of the weaker retailers in the S&P 500, losing about 8%, and Gap already, sort of struggling there for Gap, but losing about 8%. Also one of the bigger losers in the retail space there. So not good for retailers in general if you happen to be kind of following along through there. Let's see if we can go through the NASDAQ real quick and see what's good over there. Maybe the NASDAQ 100. So you got Vertex stronger on the day. That's VRTX. ATVI and EA, right? So we talked about EA already. Electronic Arts. Something must be wrong with the charts there. That's interesting. So in the NASDAQ there, just a couple of those leading to the upside, and then Win on the downside there, really weak there, and Hasbro about 5.2%, which you know about Hasbro, right? That's no surprise. You know what's going on with Hasbro, right? Overbought in the short and the long term, or short and midterm, we said the other day. So just starting to pull back a little bit on that one there as well. Gave you the heads up on that one. Sector news, if you're looking around at oil, whoa, oil having the worst day since 2015. Not good for oil. Actually, there we go, we could show it. So I use USO to track that, if you like to play along with me there. USO is like a direct play for oil, if you like to play along in the oil space. Hopefully you didn't play along yesterday, because today you're down 6%. Now what this means here with this drop today, you want to look forward, right? So we've got the news and you go, okay, oil's lower on the day, but don't respond to something that's already happened. You should be responding going forward, right? Always play offense and not defense. That comes from having a great investing plan. What are you going to do? Well, every technical trader is now going to be really focused on one area here in oil. Now, whether you look at oil futures or whether you decide to just use this ETF, that's fine. But you have this downtrend here. Every oil, it's not perfect, but every oil trader is going to look at that trend, meaning oil is not interesting to anybody until we break above that trend. Now the price has proven that it can't get above that downtrend line, and so traders are not going to try to guess the bottom. They're going to just simply wait for it to break above there. Because of that, you got a lot of people that all of a sudden sit on the sidelines, and you may have a recipe for a choppy price of oil. Unless it just falls like a waterfall and gets it over with, you have a reason to expect back and forth until it breaks above that trend line. And we'll maybe follow it here, and we'll see. When it breaks above there, you'll see the increased volume. You'll see other people starting to participate in there. Oil's just very much a technical commodity, meaning it trades on a technical basis. Like fundamentals are a little difficult with the global nature. So technical, you've got your pattern there to look at there. Semiconductors actually did really well. It held up the longest. So if you're looking at all the sectors today, when the news came out about tariffs, which was the last to finally crack, believe it or not, it was semis. I mean, it's only by a few minutes, but semiconductors, nice strong day, but of course, a lot of weakness on the tariff news. It finished down 2% on the day after being up over 2% on the day. And so the whole idea of this sort of basing above this range is just not going to happen now, right? So you got a nice pullback in semis. You need things to calm down a little bit, and if you like this sector and you've been waiting for a discount, it looks like you may be about to get it, or are currently getting it there. Regional banks, you got KRE is the symbol that I used for that, down 4% today. That's one of your bigger losers. Here's our list in the dojo off to the right. Regional banks coming down at the lower end of that list there. Here's the deal. You got rates hitting low levels here. So we look at interest rates. You're going to see the price spike to highs. Well, you're not going to see anything. The charts are just a little messed up. I'm sorry. So you have rates hitting new lows. So the price moved to highs today, interest rates moving to new lows. And because of that, regional banks, right, they're really focused on that. Remember, regional banks, they're lenders. Their primary focus is lending. They don't have the trading desks. They don't have the swaps desks and everything. They're not international, really. So they need to lend money out. And if rates are headed lower and they have to loan at lower rates, that means they have tighter margins. Overall, they're not making as much money. So regional banks took a bit of a hit today, which is sort of interesting.
Hey, wait. Before you go watch one of our other great videos.
Did you see what I did there? It's all going downhill. Anyways, if you look at the financials, like the big financials today, yeah, they took a hit. It was about 2% today, but they could afford it. They had a nice run. Everything was good. And so because of the low rates, that didn't help them very much either. But what it did help was utilities. So if you happen to like looking at utilities, they needed a little bit of a bounce there, right? Utilities trying to break through that uptrend, got a little bit of support today over there. So not bad. A lot of little help because of the rates moving down to lows. And I know a lot of you like gold. You like your gold miners and your silver and things like that. Gold poked up to 52-week highs today. If you happen to take a look at that, the GLD is the ETF you can use as a direct play. IAU is another one if you like. Either one is fine. So broke back up to highs here today, along with gold miners. I'm not sure if we even have that one in the deal here. Do we have gold miners? Yeah, we do. Okay. So up 5% today. All the gold mining stocks doing really well there. All right. Yep, that's all I have there. Really just weekdays across the board for everything there. We're going to cover a lot of this later in our class anyways. Individual stocks. Oh boy. Oh, it's not going to come up. I'm sorry. Beyond Meat's taken a big hit today. They priced their 3.2 million shares at $160. How's that make you feel? Remember they said the other day they released their earnings and then they said, you know what, we're going to, we have a secondary offering that we're going to issue shares. They're trying to raise about $40 million. And so stock moved lower on that news. And now they priced the shares today at $160. The stock was trading around $180. Is that a good thing or a bad thing? You guys know what that means when they price a secondary offering? Bottom line is, everybody but you got a discount on the 3.25 million shares. If you could buy the shares at 160, which you can't, but if you could have bought those shares at 160, how is that fair, right? There's a couple problems I have with this. One of them is, there's your first red flag. I didn't see it anywhere on any of the media today, but there's your first red flag as to who's really running this company. Is it management or is it the investors, those big guys that invested in the company? It's the big guys. That's not a good sign. That means they're being guided by people other than management, people that don't necessarily know the business altogether. So the stock was down 10% today on that news because they're pricing at 160. I don't know how else to try to sugarcoat that. It's not good. Just my opinion. Anyways, Shopify, 7.5% higher today, hitting new 52-week highs. Earnings beat, revenue beat. Actually, revenue was up 48%. If you like Shopify, the Canadian company here, broke to new highs. International growth was one of the main catalysts there, and they're going to spend $1 billion on fulfillment centers here in the United States to try to compete a little bit more with the likes of Amazon, and as well as offer that to their customers, those that run those sites. Also, I thought this was interesting. Kellogg's was already up like 8% on the day before the trade news. And when the trade news came out, it actually started moving a little bit higher. It almost added 10% on the day. It was their best day performance-wise in over 11 years because this is Kellogg's. This is not a growth company. This is Kellogg's, right? They sell cereal and food in general. And so it's not an exciting area of the market. What did you have today? You had earnings that were way better than expected. So people go, okay, great, I want to buy that stock. It's a good consumer staple-ish kind of stock. So stock already starts higher. Then you have the tariff news. People get a little concerned. Where do people move when things get a little concerning? They move towards the consumer staples. You notice how over here in the dojo, consumer staples only lost 1/3% because money started coming over there a little bit throughout the day going, oh boy, we don't know what Trump's going to do, so we better just go be a little bit safer with our money. So Kellogg's picked a really good day to have really good earnings is the short story there. That helps you. Now, we got payroll numbers that come out tomorrow. You got the unemployment rate that comes out tomorrow. That will be the focus. It will be the big mover. Remember, last time the number came in better than expected and the markets moved lower. So we went over that. We're like, why? The economic news was good. Why did the stock market move lower? Because it means that the Fed at that point may not have needed to cut rates. We now know that they did cut rates. So we got this new economic news coming out tomorrow. What happens if it comes in better tomorrow? What happens if the unemployment rate stays the same or maybe ticks a little bit lower? What happens if the payroll numbers come out a little better than expected? What do you think the market's going to do on that one, huh? Really, really interesting sort of scenario there. And it will be a market mover. That'll come out before the markets open tomorrow. So we will we'll cover it tomorrow on the this show. All right, other stocks. We've got 52-week highs today. Those are going to be the same names that we talked about before in the utilities sector. NiSource, which was hinting at a breakout, was a good day for it to be right there. It got a little support, got a little bit more to the upside there. So NiSource did well, and OneOak as well. Utilities just in a good position there. Unfortunately, a lot of the 52-week highs today, they hit new highs and then they pulled back, and that's just news-driven. New lows today are going to be in the oil and retail space, and now you know why. Oil had a really horrible day. Anything oil-related had a really horrible day, and retail had a bad day as well. Well, bad half a day after the news there, and so retail moving. A lot of those 52-week lows like PVH, which is Calvin Klein, Foot Locker, and Urban. These stocks were already weak to begin with, so they just hit new 52-week lows on that. As far as earnings tomorrow, we got Chevron, we got Newell, Sprint. I guess Sprint on there twice. That may be a typo. You got Seagate Technologies. You got ExxonMobil and X-Ray if you're interested in that little sub area of the world. And I think that's about it. I mean, today was a pretty much a straight focused day. So we'll see. If you have any questions, I'm happy to answer your questions. Otherwise, we will wrap it up there. We'll get ready for our class later for our customers. All right, let's see what we got here. You guys like some of the products they make there? Kellogg's and General Mills. Any connection with oil in China? Yeah, at least in the short term, it's been responding to this trade war news. You have oversupply. We already know that. And, that's not helpful, right, in the short term. There was no real other significant news in the meantime. And it was one of those days where just selling piles on selling. It doesn't mean that there was like news and then some other news. It was just sellers decided today was the day this stock was there, the price of oil was going lower. And so when you get everybody leaning in the same direction, your active traders, your position traders, momentum traders and everything, it was just a good day for them to kind of pile on the short side. No futures expiration or anything like that. You think it makes sense to own MasterCard and Visa? You already own Visa, but you like both companies. Are they too similar? Nothing wrong with having both names in a sector or in a category, or having two names that are really related together, as long as it's not like my entire account is made up of these two names. Like in our portfolios, we have like 2 and 3% of each position, so there is some overlap in there, and we use that overlap to adjust the speed. Or hopefully reduce the volatility if we can. So nothing wrong with that as long as you're not being too big overall relative to your portfolio. Can XOP come back? Yeah, I know. It's a bit of a disaster there. Moving in the opposite direction there with the price of weak oil. As long as oil stays lower, the reason that keeps trending lower, by the way, is with low prices of oil, you got quarter after quarter, these companies just showing less and less revenue, right? So it's not because oil is getting weaker and weaker, it's just because it's hurting these guys in the long run there. Yeah. You like the beat up healthcare sector? Yeah, I know there's a lot of people that like the fact that that's been an underperformer as well. It's going to be a little bit volatile, I think, as we get into election season, but you got time. Yep. When is the next crisis coming, in your opinion? I actually don't believe there is a crisis coming, so I wouldn't be able to answer that because I just don't think there is a crisis coming. Could there be a market pullback, a small recession, a sort of a pause in the overall market? Absolutely. It'd be totally normal and welcome. And if you think about it, the market's already doing that. It's been doing that for a year and a half. If you go look up a mutual fund or go to our website and look up portfolios and look at the year-to-date performance. Oh, do we post the 1 year? I don't think we post 1 year. Anyways, go look up a mutual fund somewhere, any sort of normal mutual fund or ETF or anything, and look at the year-to-date performance, which is what everybody's focused on. And then go look at the 1 year performance. You know the S&P is up less than 8% in a 1 year time period? I think it's under 7% after today. So the market has essentially just been going like this, but it's at highs. So what happens is the market's sitting at highs, but not really making any exciting progress if you've been invested for a few years. But every so often you hear of, oh, we hit a new high. Oh, we hit a new high, new all-time high, and it's exciting. Well, we hit a new all-time high because we just poked up there and came back, poked up there and came back. So really interesting kind of mental game that the market plays with newer investors that are like, hey, it's been a year, I made 7%. Yeah, so did everybody else, if you're, in market related. Do you expect a market correction in the near term? Correction is an aggressive term now. I expect a pullback. I think it's way too soon to tell if it's going to be a correction or not. Way too soon. People get excited and they react on down days. I understand that, but still way too soon. Oops, sorry. So if I missed a few, they're like scrolling down there. Earnings, got ExxonMobil's tomorrow morning from what I show, but my list could be off here. So let me double check that for you, because I noticed there's a couple other names on here that have already reported. I might have made a mistake today. August 2nd I show. Yeah, that's tomorrow. So ExxonMobil you got tomorrow, and Chevron, yeah, that should also be tomorrow as well. Unless they changed it last minute. Yeah, Chevron also tomorrow. Yep. GoPro, yeah, I saw that. I didn't catch their earnings there, but they deserve it. You gotta kind of, like, there's some people you just want to cheer for. You know, you want them to do well, and Nick Woolman is one of them. Or what's his last name? GoPro Nick. 5 1/3% after hours. Good. I hope things are turning around for them. More, you know, you get what I'm saying. You read that Ford, BMW, Honda, VW are trying to bypass the Trump and strike a deal with California on gas mileage. I heard that on NPR or something in the radio. I don't really listen to the radio, but I heard that somewhere there. I actually don't know enough about that to say I could give any valuable opinion. Even a pullback in the banks, yeah, that would be great. I think if the banks pulled back in here, granted they started today, 2% depending on where you're looking. I think a pullback in here, especially on the financials back to 27 or maybe even the 200-day moving average, I think it's attractive, and I think people would buy that if they got that kind of discount. Because what happened? It's all psychological, right? So people have been seeing the banks move up slowly but surely, recognizing that that's a discounted area, right? And they have some overvalued areas here. They've been moving money into it. What happens? There's a lot of people that have been stuck on the sideline, and they're like, I didn't get a chance to buy banks. Oh, man, I see it's a discounted sector. I want to get in. And then when they see the pullbacks, this will be their chance. So we'll see. Yep. Are you insiders be allowed to sell and avoid the lockup? Not on the original shares, Harry. Yeah, if you really want to geek out on it, it's a very interesting loophole in the rules where they are going to get around that rule in a way, but nobody's focused on that. You guys talking about the fire movement, picking up some steam. I keep hearing that more and more. You got it. On the trade war thing, maybe the Chinese are looking for alternatives like Russia, future trading partners, then no deal. For some things, yeah, right? They still got to deal with us on chips. You know, they still have, and not the potato chips. So I just don't buy it, right? I don't buy it because there's not, while we as citizens feel the animosity, certainly some people love or hate Trump. Over in China, they're doing the same thing. Some people over there really dislike us now because of what they think we're doing. And so while us as citizens are acting that way, the leadership, they actually really get along. I mean, there's, you know, I think at the end of the day, they're going to work it out. If I had to bet, you know what I mean? I'm not gonna, but you know what I'm saying. Cool. What do we have here? I think that's pretty much good with me. Principal, unfortunately, yeah, they reported earnings today. Stock was down. Or you mean Prudential, I think. Is that what you mean? I think you're talking about Prudential. Lost 10% today, breaking almost an entire 3-month range, if Prudential was your question. Yep. Biomed, I saw that. They were at the absolute bottom of the list, I believe, in the NASDAQ. Yeah, not good. That's why I don't mess with that sector. I don't mess with that area. No. Do you think the Dow hits 30,000 by the end of the year? So my fun way of looking at this, not a prediction or a guess or a suggestion in any way, my fun way of looking at this was to say if we could pull back. By the way, we're going to cover all of the August performance tonight in our portfolio update. You know, every month I go through and I go, what do we expect in August? What are the historical stats and everything like that? So it's not good. But anyways, my thought was if the markets could pull back through the summer, and even as we get through the sort of after summer excitement, everybody comes back to work, that would be ideal versus moving higher through the summer. So in my hopes, I hope the market pulls back over the next month or so and sort of sets up that support for a rally into the end of the year. If the markets continue higher, then we have every stat. I've shared them with you guys that the market actually will not finish higher than where it did just 20-something days ago. Yep. There should be jazz wealth parties. I don't like it. Yeah, I like it. We're building, if I could turn the camera around, we're building an entire like 2-story bar with it would be sort of a stage on the top and everything. I don't know why. All right, cool. I will wrap it up there. I appreciate you guys watching and putting up with us today. We'll be back tomorrow to wrap things up for Friday. If you're one of our customers, we'll see you in a little bit. I'm going to get started and finish up all of that. And yeah, enjoy the rest of your day. Thanks for watching, by the way. We'll see you later.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.